Hello, friends. We are actually watching Nifty's weekly chart, and as you can see, Nifty has actually this week formed very small range body candle, and previous week was a long bearish candle. That red candle is a long bearish candle, and if you look at the formation, then it is actually bullish harami. That is as per Japanese candlestick literature. That is one aspect. No, normally bullish Arami indicates pause. So what it means that this long body candle, it is indicating downward movement that may get paused. So that which was paused actually. So some sense of balance is actually coming into the market. Now, if you look at the left side of the candle, this range, so here also there is a variation of bullish Arami, and after that we have seen 3 weeks of rally, though it was not able to cross a particular level and go beyond that. It struggled around this central moving average of weekly Bollinger Band. So that is indicating that on the upside there's selling, and if you really look at it, uh, the upside looks limited at this point of time, but only after some new information comes in into the market, we can actually take a further call on that. Now, why I'm saying upside is limited because when this particular 26,000 plus level top was formed, at time expectation was that GDP growth would be high for near future, and then when this level was touched, that time the information that came in by in RBI policy was that GDP slowdown is visible. So if that is the case, then obviously upside will be limited because institutions normally, uh, large players do take into account these fundamental aspects of the economy in their investment. So upside will be limited as it stands now, and this is why it is indicating that there is a possibility of we going down further from this candle, which is a possibility I'm saying, and hit this low. So low of this particular candle. Now, in the near term, uh, the breakout of this green candle, small body candle, that would be critical. Whether it will be sustainable in that direction or not, that only time will tell. But those who want to actually play the breakout. So if there's a downward breakout, we can actually buy a put. Upward breakout, we can buy a call. If you look at, if you have a view that limited upside it could be there, so you can actually sell spreads, call spreads, create spreads basically to have a premium in your account. For example, here now 24,500 call you can sell, and then 24,800 call kind of call you can buy. But you can have a variation there of basically, and stop loss is must because uncertainty is there. So stop loss is must. And on the downside, if there's a downward breakout, we can see it coming down to this range again. So this particular low level is of this candle is 23,264, so around 23,300. So that level can be hit if it actually breaks on the downside. Why break is possible? Because this is indicating downward momentum. The big red candle is indicating downward momentum. So that's how I think the market will play out. Uh, if you look at this particular big range, last 3 4 months, July onward movement. So if on a weekly chart, so you can see that it is forming something called head and shoulder kind of pattern, which is like commonly known pattern in candlesticks or even technical analysis literature. So here, if it is head and shoulder pattern, which is a possibility, which is what I think it is, uh, this break actually over here, you can see that I'll just draw a line over here. So this is a line. This is the level, important level now. The other level I'll draw. This is from this level. So it is actually below that earlier low. This low I have drawn now. This line, and it is actually uh, between that lower this candle's low. So this range is going to be important. If it struggles over here, the current candle's high, uh, then I think we may actually go down to this candle's low. So this can be touched, and to complete it and should pattern, I think this downward sloping line is has to be broken. So that will take some time. But at the same time, if it is a head and shoulder pattern, then the downward sloping neckline basically is itself bearish. So that is actually indicating that we may go further down. So now just by looking at basic targets, this is I think around 23,600 level, and this is 26,300 level. So around 2,500, 2,600 points, it has a that range is there. So if you deduct that from the current level, then the target comes to around 21,000. So 21,000 is a possibility. And if you look at this level, this particular candle, this was formed at the time of election results. So that target of around 21,000 is matching with the low of this uh, approximately. So that is indicating that we may see a hit to a level, this level, if these two three support lines are broken. So that is the view from my side. If you like these clear, crisp views, then definitely I can subscribe to my channel, like my videos, hit the notification button, and circulate the video to your friend circle. So with that, I'll take your leave and I'll meet you in next week's update. That's for the time being. Thanks for watching.